The World Bank recently released its 2014 World Development Report entitled Risk and Opportunity. Today, I'm speaking with its Deputy Director, Inci Otker-Robe. You're here to promote the recently released World Development Report. The report was released at the back of a great financial crisis, and some claim that the report didn't pay much attention to the regulation of the banking system. How do you assess this claim?
There are many financial institutions that need to take risk in order to deal with a certain transaction. But if they do not know what kind of risk they are getting themselves into and do not cover themselves against that risk, then they get into trouble. So that the key weakness was weaknesses in the risk management systems of the institutions. And the second weakness was from the regulatory and supervisory side, for the regulator and supervisors not having any idea of what these institutions were doing. And one aspect of it was that they were doing too complicated, complex transactions with securitization and complex derivative activities, which sometimes even the chief risk officer of the institution didn't have any idea what was going on. So it was a failure at the institution side, and it was a failure at the regulator and supervisory side. Not to see these weaknesses. But there were also weaknesses in the infrastructure. The settlement and payment systems was not well structured to be able to make these transactions, and whenever there was a problem with the liquidity in the system, to be able to resolve that very quickly. And the last thing was there was no contingency planning, adequate contingency planning by the institutions or by the regulatory authorities. So every institution should expect that when they get into trouble, there is a certain set of actions that it needs to take in order to resolve the risk and consequences quickly. But there was no such thing at the time.
One of the recommendations of the report is to establish a national risk board. How is that different from ordinary good governance? What's the novel approach about it?
The novelty of National Risk Board is that, and I should clarify that there are some countries that already have national risk boards, and we found them quite useful that other countries may apply. The novelty is that a country faces a variety of different risks, natural disaster risk, economic financial crisis risk, pandemic risk or spread of contagious diseases, or other social crises. So if each risk is handled by a specific ministry or an organization, this may not be sufficient because sometimes risks interact with each other. One risk may lead to another, either or happen simultaneously, and if addressing them in a coordinated way is much more efficient than handling them individually. So the idea of a national risk board is to sit with a group of experts and group of policymakers, sit together, analyze these risks, and what are the trade-offs and interlinkages across those risks, and what are the synergies in addressing them. And then once you do this diagnostic work, then you develop ways of prioritizing across, because there are always limited resources to deal with every type of risk that a country can face. And so by prioritizing among them, choosing the one that may help also addressing the other risks that the country may be facing is a very efficient way of doing that.
The World Bank has been fighting poverty for a very long time. How does the road ahead look in terms of tackling poverty?
The objective of eliminating or reducing extreme poverty, which is basically the number of people who live on less than $1.25 a day, the objective of halving the poverty rate compared to 1990 by today has been already achieved by most countries. But our new president, I shouldn't say new because it has been a while by now, he has dual objectives after he came, and he developed a new strategy for the bank. And one of the key objective for him is to eliminate extreme poverty by 2030. And so he would like to, in fact, gear the whole work of the bank in that direction, eliminate extreme poverty and also boost shared prosperity, because there is a group of people who are above the extreme poverty threshold, but they can very easily fall down into it and remain there and get caught in the poverty trap. So he has these dual objectives of not only lifting people up beyond the extreme poverty threshold, but also preventing people from falling below it.
CERGE-EI is pleased to welcome you and your colleagues here for this talk. What's your impression so far about CERGE-EI?
I think it's a very nice school. I already knew about the school from some of my colleagues at the IMF. I work with a number of colleagues from Czech Republic, so I knew about the school. I knew it was a very good school, and I see from talking to people that it's a great place to be. And one very interesting aspect is it's a very international school and program. So you have already very diverse backgrounds and problems and interesting issues you bring together. So learn from each other. I think this is a really nice environment to be.
That's all the questions I have. Thank you very much for this interesting interview. And on behalf of CERGE-EI, thank you for your visit.